Hey guys, Casey Baker with the Station Real Estate, sitting here with the one and only Andrew Loyed from Elevations Credit Union. There's been a lot of news coming out about fee changes for home buyers starting on May 1st. Let's get you the right information. That's why Andrew's here. What are the changes that are going to be taking place on May 1st?
Yeah, so mainly the changes that are going to be coming into play here is going to be based on credit score and down payment. So what these are is they're called LLPAs, I'm sure you've heard of before. That means loan level price adjustments. And essentially what we're talking about here is the cost that's associated with a certain rate based on that credit score and their individual down payment.
Sure, so both of those work hand in hand,
Yep.
Credit score and down payments.
Exactly.
So let's say we have a buyer who has a high credit score and is looking to put a large amount down, let's say 20, 30%. How is this going to affect them?
So it's really going to come down to that exact down payment amount. So if, we're looking at the differences between, if they're only going to do like a 3 to 5% down as opposed to, maybe 20% down, it might not necessarily benefit them to put down that 20% based on these new pricing adjustments. And so that's where we can kind of look and see what their threshold is for, if they want to put down just 20 or they want to do 25 to 30, then we can kind of look and see if that would even benefit them as opposed to just doing the 5% based on the cost changes in that rate.
Sure, and there's no harm in you running the numbers both ways for those clients, whether it's 5% down, whether it's 30% down.
Exactly.
We can get all that information up front and know where they stand.
Yeah, no, 100%. And I think that's the best thing to be able to look at as far as, if we're only putting, let's say 20% down is the figure, and that's what they feel comfortable putting down to get out of the mortgage insurance, of course, then we can look at, would it even be beneficial for them to put 20% down, or maybe should we do 5% and see in the future, maybe paying that down and doing a recast after the fact, it might benefit them on the cost to do so.
Sure, and real quick, what is a recast in a loan?
Yep. So recast essentially is where after you've already closed your mortgage loan, you're making a certain sum of a down payment to pay down the balance. And a recast is where we're going to reevaluate what's left on that loan and we're going to amortize that over the remaining term of the loan. So if they made one payment, then, we're talking, 359 payments if it's a 30-year mortgage or whatever that is. So essentially for them in the long term, it would be the same as if they had put down that 20% originally and gotten that original cost that they
Sure,
wanted.
but just avoiding the new fee adjustments with these LLPA
Yep,
increases.
for sure.
Fantastic. So then let's talk about the other end of the spectrum, people with lower credit scores and lower down payments. How are those people going to benefit from these price
So
adjustments?
this is really geared towards benefiting those people that are barely qualifying or maybe they didn't qualify before, because the fee adjustments based on, I would say, like a mid-tier credit, let's say like mid 650s, they're getting a great benefit by these new adjustments as opposed to somebody that has a 740 credit score, and they're going to be getting a lot less cost involved in getting into a home.
Sure. So it's more affordable for people who might need a little bit more help with down payment. And this doesn't take away any down payment assistance programs. This doesn't affect FHA loans or VA loans. So there are a lot of benefits for buyers who need a little bit of help to get to where they need to achieve.
And I think it's going to benefit them the most because it's going to be able to allow them to get into a home for a lot lower cost as opposed to, prior to May 1st, they were going to be paying, on average, if you were to just say, an average of a $300,000 financed amount, they're probably going to be saving anywhere from, $3,000 to $4,000 in cost on these loans, moving forward. So it's going to give those first-time home buyers that do have that maybe mid credit score, they're still building their credit, they don't have a lot of credit yet, it's going to put them in a lot better position to get into a home without having to pay a super high cost as it would have before.
Sure, and that's one thing I think we wanted to clarify with all of this is that yes, the fees got more expensive for well-qualified buyers, but it's not well-qualified buyers giving money to low-qualified buyers.
Exactly.
It's a fee change adjustment, and there are some really creative ways that we can mitigate those fees for buyers who need them mitigated, and we can always also use these fees to help buyers who need the help.
Most definitely. And even if you look at that, I would say mid to high 700 buyer, they're not going to necessarily be penalized in the big scheme of things. They might be paying like an eighth higher in cost with these new fees, depending on where they fall in with their credit score and the down payment. But with the recast, that's where we can kind of put them in almost the same situation they would have been before. They just have to make that first payment and then we can recast it out. So they're still getting the same amount of savings they would have before, but that's where it kind of comes into being savvy with making sure you're coming in at that right price point to see what the different breaks are and kind of evaluating those options effectively.
Sure, and that's one of the things that I think we both want to emphasize is that buying a home is a complex thing. Andrew's sitting here because I don't know all this information and I'm not supposed to know it. That's why I work with guys like Andrew. So you're not supposed to know all this information either, but working with someone who does know this information and can really show you all your options before we have to make the decision is going to be vitally important. So thanks for tuning in, guys. If you have questions, give us a call. Talk soon.